All right, thanks everyone for joining us today. This is how to invest tax-free using a self-directed IRA or 401k. My name is Sean McKay, and this is an American IRA presentation. And so really this is kind of a quick hit webinar where we're going to discuss the most fundamental aspects of these self-directed retirement accounts, what they are, and the types of investments that they can make, and just a little bit of food for thought in terms of how you might want to think about structuring your portfolio. And so, again, this is just going to be kind of a quick shot at this today, not going to be a lengthy discussion, but for those of you that might be completely unfamiliar with self-directed IRAs and 401ks, hopefully this will be helpful. And so, in order to have a retirement account, you must have a financial services company that is essentially doing the record keeping for the assets that your retirement account holds, and a custodian taking responsibility for those assets. And so there's an administrator and custodial element associated with a self-directed IRA or 401k. And so American IRA is the record keeper for these retirement accounts. Now we're able to be in business because we have a custodian, New Vision Trust Company. And so we're actually one of the few self-directed IRA providers that is a fully integrated self-directed provider, meaning we have the same ownership group for American IRA as we do for New Vision Trust. And so that's gives you as the client a few benefits. So first and foremost, what it does is it allows us to keep our fees exceptionally low because we're not completely separate companies with different ownership groups and need to create profit margin. We can pass that savings along to you as the client. It also allows us to be as up to date as a self-directed IRA provider can be in terms of what's happening in the regulatory environment, getting direct feedback from the banking commissions, from auditors, and what have you. So it's a huge, huge benefit having a fully integrated company. Now, to me, kind of the first thing we want to look at with these self-directed accounts is what accounts can we use? And so the easiest way to think about this is to start with the retirement account that you have currently. So if you currently have an IRA or 401k, let's start there. So if you currently have an IRA, you're likely going to want to open the same exact IRA with us at American IRA. So for example, if you have a Roth IRA currently, you would just simply open a Roth IRA with us, move over whatever portion of that existing Roth to us. Same would be true for traditional IRAs, for SEP IRAs, simple IRAs, etc. The one time where your account will likely change forms is if you have an old employer-sponsored plan. So if you had an old 401k, a 403b, or a thrift savings plan, many times those are pre-tax vehicles. So you would also need to open a pre-tax retirement account with your next financial services relationship. So let's say you have an old 401k, you want to open a self-directed IRA with us, you would open some sort of, again, typically pre-tax vehicle like a traditional IRA. And so again, this isn't typically a very complicated analysis or process. It's simply a matter of just simply filling out our paperwork to open the appropriate account, checking the box for the type of account you're opening, and then that account gets created for you. And so really when we think about these self-directed accounts, the common theme today is going to be that the only thing that's changing are the types of investments you can make with your retirement account. There doesn't have to be some sort of dramatic paradigm shift in terms of the rules and regulations around retirement accounts. We're just simply a company that can give you more options than companies that just deal in stocks, bonds, and mutual funds. And so in some ways, to me, one of the easiest ways to think about the types of investments that we can make with our self-directed account is to almost kind of invert the question and say, what is it that we cannot invest in? And it's a very small and largely kind of irrelevant list of things we cannot purchase with our retirement accounts. So essentially that's collectibles and life insurance policies. So with collectibles, that could be anything from artwork to antiques, fine wine, whatever is deemed a quote unquote collectible per the IRS code. And again, that's a it's usually a list of items that do not come up in conversations when clients are talking about what they're interested in investing in. So again, collectibles and life insurance policies. And so from that, you can extrapolate almost endless opportunities of how we can make these investments. So a common asset class for clients to be interested in and to kind of do some research around is the real estate asset class. So any type of real estate can actually be owned by your self-directed IRA or 401k. So it can be raw land, condos, townhomes, single family houses. It can be small multifamily, duplexes, triplexes, quadruplexes. It can be very large multifamily buildings. It could be 100 or 300 unit apartment complex. It could be a retail shopping center, really any type of real estate that you would like to invest in. Many times that investment can be made with your self-directed IRA or 401k. And with that, typically on the larger scale investments, so those kind of multi-million dollar real estate deals that we spoke about with big apartment complexes or retail spaces, many times we'll see a group of investors come together to make that investment. So you might not have the necessary $12 million needed to buy the big apartment complex, but with a group of investors, many times they'll come up with a down payment, go and get a loan for the remaining balance. And then there's a group of investors that own that multiple hundreds of units of the apartment complex. So typically that's through an LLC structure. Now, we also see clients that will decide that they like real estate, but they just simply want to be the bank. So they will be the lender and they will secure their money by a property, just like a Bank of America or a Wells Fargo can. And so that money will be secured by either a deed of trust or a mortgage. Also, we're seeing clients invest in opportunities such as tax liens. So basically paying a delinquent property tax bill on a piece of real estate with the expectation that you'll get an investment return if and when that homeowner is able to get caught up on the property taxes plus the accrued interest or penalties. Or there's actually in some states a process where over a period of time you can actually end up acquiring that property via a tax deed sale if the property taxes go unpaid long enough. We're also seeing a tremendous amount of clients that are interested in investing in non-publicly traded companies. So we're all familiar with using our retirement accounts to invest in stocks and mutual funds, the quote unquote, the stock market, if you will. But there's also this entire world of privately held businesses that we see clients investing in. And so that can be an interesting opportunity as well. So it can be a business that is just getting started, or it could be an existing business that's looking to expand in some way, maybe add additional products or services, add locations, whatever the case may be. Your retirement account can actually invest into those opportunities as well. So again, as long as we're staying away from collectibles and life insurance policies, there is so many opportunities for us as investors. And many times it starts with what we're knowledgeable about, what we think is an appropriate investment, what we think has some upside, or just simply trying to diversify our portfolio outside of stocks. So doing something that's just a little bit different than what our portfolio currently consists of. And so when we think about these self-directed accounts, the question that comes up regularly and actually came up last night in a kind of a, we'll call it a networking group. And the question was around, well, what types of investments should I make inside of my retirement account versus outside? And it's a great question, but certainly, as is the case with most things, it is such a personal analysis and answer. And I do think there are some kind of overarching ideas and themes that a lot of us take forward in our self-directed investing. And so the first element that I would consider is if we're purchasing an asset and we think that at some point in the future, let's say maybe years down the road, we think that there's going to be some real upside with whatever the investment is that we're looking to make. and we think that at that point in time, we're likely going to sell that asset. That is an asset that I think would be very much eligible for consideration for a self-directed account. And the reason for that is that the vast majority of the time, when we sell investments personally, there's usually a pretty significant tax consequence associated with the sale of the asset. And for those of you listening to this in real time and kind of late 2021, there's certainly a lot of conversation out there. There's a lot of proposed bills out there about raising tax rates, short term, long term. And so the tax burden would just be that much greater moving forward if we're selling assets in our personal name. So I think that's a great type of situation where we might want to consider a self-directed investment. So kind of tying in with that, I think also investments that are inherently tax inefficient are definitely investments that we would strongly want to consider inside of a self-directed account. So an example of this would be, I was having a conversation with a CPA the other day, and he mentioned that he has a client that is a full-time entrepreneur. They are involved in real estate in a number of different ways. So they own rental properties, they buy some distressed properties, they fix them up, and then they sell them. And then sometimes they're actually a bank and they lend money as a private lender to other real estate investors. And the great thing about this CPA was that he was an astute guy, and he understood that, especially with the loan aspect, making a loan to an investor in your personal name or even in your company is typically a very tax inefficient strategy. We get crushed on, it's basically counted as ordinary income, the interest that we make on those loans. Conversely, if we make that same loan inside of a self-directed IRA or 401k, that is going to be a tax deferred or a tax-free type of investment. So depending upon the type of account. So if you have a pre-tax account like a traditional IRA, the gains are tax deferred. If you have a post-tax account like a Roth IRA or a Roth 401k or solo K, then in that scenario, your retirement account will make the investment, the profits come back tax-free, assuming you have that account in existence for at least 5 years when you start to take money out, and you're at least 59 and a half when you start to distribute those funds to yourself personally. So tax inefficient investments inside of these accounts is definitely a consideration as well. Also, I would see investments where clients feel as though if the investment actually hits, that there could be some tremendous upside with the investment. I would much rather want to have those investments inside of a retirement account versus in my personal name, kind of going back to what we're speaking about with wanting to be tax efficient. And so with that, an example could be, we see clients will invest in these startup companies, and certainly you really have to understand the company, and there's always a chance of loss of capital. But for those that actually hit and they go on to be the next, whatever the case may be, Apple, Google, Amazon, if you're able to be on the ground floor of those types of opportunities, you understand that the multiple of money that you're going to make on your investment is going to be astronomical. You might 100x, 1000x, 10,000x the investment that you're making. And so with that, those are investments, again, that we would definitely want to consider in a kind of pre-IPO setting as an investment that would be phenomenal for our self-directed retirement account. So we have so many clients who will invest in that privately held company. The company ends up going public, assuming that they're successful, profitable, usually at that point in time. And then again, if it ends up becoming the next Amazon, the shares end up becoming publicly traded shares. They kind of get shifted into publicly traded shares. And then again, that can be wildly profitable if that investment hits. So making those investments inside of a retirement account, if it ends up being a windfall of perhaps millions or tens of millions of dollars, would be phenomenal inside of a tax efficient vehicle like a retirement account. And so as we kind of tie this all together, as we're thinking about making these investments, there's really only a few steps here. The first thing we must do is open and fund our self-directed account. So that could be your Roth, your traditional, your solo 401k. We then go out there and identify the opportunity that we want to invest in. It could take days, weeks, months to find the right opportunity. It could be the real estate deal. It could be the private equity deal. It could be simply investing in some digital assets such as Bitcoin. It could be gold and silver, whatever you think is the appropriate investment. Once you identify that opportunity, we assist you with the documentation for the acquisition of the asset so that your retirement account actually directly owns that asset, not you personally, but your retirement account. Just like it can own shares of mutual funds, it can own these alternative assets as well. So hopefully that was helpful for you guys today. Our next webinar is going to be November 1st at noon Eastern Standard Time. That's lending versus real estate ownership inside of your IRA or 401k. And in that, we'll discuss kind of the pros and cons of both of those strategies and some things to be aware of as you're structuring your self-directed portfolio. And if you're looking for additional content, we do have a channel on YouTube. It's American IRA LLC. And so again, just kind of content whenever you're interested in kind of furthering your education. Love to see some comments from you if there's any additional types of webinars, whatever you want to call this, YouTube videos that you want to see out there. Please let us know, and we'll be happy to create that content for you. As we like to say here, we feel like we're in the awareness game with these self-directed accounts. We just simply want to make as much of the public aware as possible about the opportunities that we have to invest our IRAs and 401ks and do it in a way where we can create wealth for ourselves and for our family. So I really appreciate everyone's time today. Again, I'm Sean McKay with American IRA. My email is Sean, SEAN, at AmericanIRA.com. And our office number is 828-257-4949. All right. Thanks so much, everyone. Have a great day.